Hello everyone, my name is Farhan. Today here we have got a question where we are practicing prepaid expenses and income received in advance. As usual, you'll see the question on the left hand side of your screen, and on the right hand side we'll have all the workings which I'll go through step by step. What I need you to do now is focus and follow through the entire content for an excellent understanding. So let's begin. Snow White Beauty Salon prepared her accounts at the end of its financial year on 30 September 2017. The following information is provided. Account balances at 1 October 2016. So you can see we are given the opening balances for prepaid advertising, which is a current asset, and the opening balances for beauty service fees receivable, which is also a current asset. We are given other information such as the cash book extracts. We have made some payments for advertising, which is $24,000, and we have also received beauty service fees income. So this is cash inflow, cash that we received, and that's $30,000. Here we have got some additional information with regards to some adjustments for advertising and beauty service fees. And the requirement in the question is to first prepare the accounts for advertising expense and then the beauty service fees income. So let's look into the workings on the right hand side as well. So we understand that we're working with a business where the financial year starts on 1 October 2016 and the financial year ends on 30 September 2017. And we have been first asked to prepare the advertising expense account. We know that we're given the opening balance for prepaid advertising on 1 October 2016. What do we understand by prepaid advertising? Prepaid advertising is a current asset which refers to advertising that you have paid for in advance. So this is not an expense yet on 1 October 2016. It is a current asset for the business. And in the future, as you use the benefits that comes with this prepayment, this gets expensed. So when we first want to record this in the advertising expense account on 1 October 2016, we need to record this as if this is a current asset. And all assets, as we know, by default, should always have an opening balance on the debit side. So on 2016, 1st of October, I've included prepaid advertising as the description, which has an opening balance of 5,800 debit, with the final balance being 5,800 debit as reported in the last column. All right. Now, during the year, we know that we have made payments for advertising, and that was $24,000. Okay, so when we are making a payment for advertising, what's the journal entry? Because you have made a payment, your cash at bank balance goes down, and cash at bank is an asset. So if the balance goes down, we have to reduce that asset. When assets go down, we decrease it, we have to credit it. So we credit the cash at bank account and we would have debited the advertising expense account, right? So what is happening within this advertising expense account is we're recording the entry for cash at bank on the debit side because this refers to the payment that we have made specifically for the advertising expense on 30 September 2017, and that was $24,000. So altogether, $24,000 added to $5,800, both of which are debit balances, gives us a final balance of $29,800 debit. Okay? Now, based on the additional information, 1/4 of the $24,000 paid for advertising was meant for a promotion campaign in November and December 2017. All right. So what do we understand by this? We know that we are working with a business where the financial year ends on 30 September 2017. So if we have made payment for advertising, which relates to the month of November and December 2017, this refers to payment that you have made in advance for the next financial year, right? And this payment that we've made in advance is 1/4, which is 1 divided by 4, which also means 25% of the total $24,000 that we have made as payment. So that comes out to be $6,000. And this is payment made in advance. Therefore, we can call this a prepaid advertising, which falls within the definition of a current asset. Because you have made payment in advance, you have the economic benefits available for consumption in the next financial year. All right? Now, this prepaid advertising, which is essentially an asset at the end of the financial year on 30 September 2017, where should we record this? Within the advertising expense account. Should we record this on the debit column or on the credit column? We are going to record this within the credit column. And why is that so? Always remember, all assets should have an opening balance on the debit side, which is what you have seen for the 1st October 2016, where we have included $5,800 on the debit side. And all assets should have a closing balance on the credit side, which is what we are doing now. Okay? So on 30 September 2017, the $6,000 relates to the closing balance for a current asset for prepaid advertising, and that is what we're including within the credit side. So altogether, $29,800 debit was the previous balance, from which we subtract $6,000 of credit. That leaves us with $23,800 of debit balance. Okay? And this is what we will transfer eventually to the profit and loss account. So the profit and loss account will take this balance of $23,800, and this is on the credit side because we're closing this advertising account, expense account. Expenses by default are debit. When you want to close it, you have to close the final balance as if it's a credit. So that's what we're doing here, $23,800 recorded within the credit column, which refers to the profit and loss and therefore cancels out the balance and makes it zero. All right? Okay, so now let's prepare the account for beauty service fees income. Okay, so here we will have some adjustments relevant to income received in advance. Okay, so let's have a look with what's going on. Now, the account balances at 1 October 2016 for beauty service fees receivable. This is a current asset, all right? The reason this is a current asset is because this service fees is what we expect to receive on 1 October 2016. So as we already know, all assets should have an opening balance on the debit side. So that is what we have done to begin with. 2016, 1st of October, we have included beauty service fees receivable as the description, and we recorded the balance on the debit column, $3,500. All right, because all assets by default have an opening balance on the debit side, and therefore the final balance is $3,500 debit. Now, during the year, we know that we have received beauty service fees income in cash into our bank account, which was worth $30,000. All right, so that $30,000, when we would have received it, how would we have journalized it? We would have debited the cash at bank account, because we're getting some money, right? And we would have credited the beauty service fees income account. So I'm just writing BSFI in short. Beauty service fees income is going to be credited and the cash at bank would have been debited. So if beauty service fees income is going to be credited, that is what we are reflecting within this main account which we are preparing. $30,000 is being recorded on 30 September 2017, which is being credited, as you can see, within the beauty service fees income account. And the description, which is the relevant cross-reference, is the cash at bank, okay? Altogether, $3,500 debit and then $30,000 credit. When they are adjusted, we are left with $26,500 with more weight on the credit side, okay? So $26,500 credit is what we're left with, okay? Now, let's look into the additional information. Number 2, out of the amount received for beauty service fees, $2,000 was given by a customer, Belle, who booked a package which entitles her to 10 beauty treatments. Belle has only used up to 5 of the 10 treatments of the package as of 30 September 2017. Okay, so what we can understand is this customer Bill has paid $2,000 for 10 beauty treatments, right? Which means one beauty treatment should cost us $2,000 divided by 10, which is $200. What happened at 30 September 2017 is only 5 out of these 10 treatments have actually been used, which means when we are preparing our books for the business, we have to record the fact that we have 5 treatments for the cash which we have received in advance. All right. So as we understand, 10 beauty treatments cost us 2,000. Therefore, one beauty treatment should cost us 200, which is 2,000 divided by 10. And we know 5 of these beauty treatments, we have received the payment in advance, and that is what we are calculating. Service fee received in advance is 5 treatments multiplied by $200 per treatment, which is $1,000. So altogether, at 30 September 2017, we have to record the fact that we have received $1,000 of fee in advance, and we still haven't delivered these services yet. This falls within the definition of a current liability. The reason this is a current liability is because we as a business now have a present obligation to our customer to deliver the services in the next financial year. Okay? We have received the cash already, but we still haven't delivered the services. And in the next financial year, we must deliver the services. Therefore, they fall under the definition of a current liability. Always remember, all liabilities by default should have an opening balance on the credit side and a closing balance on the debit side. So this is basically the exact of what we do with assets. So because this $1,000 of service fee received in advance refers to the balance at 30 September 2017, this is a closing liability balance. Therefore, this should be recorded as a debit. So this is what we have done here. On 30 September 2017, we have recorded beauty service fee received in advance of $1,000, and that is recorded within the debit column. All right. Now, 26,500 credit, take away 1,000 debit, we're left with 25,500 credit. Okay. And lastly, we have to close this account at 30 September 2017 because all expense and income accounts are temporary under the matching or accrual basis concept. So what we have to do is transfer this 25,500 to the profit and loss statement. And the way we transfer this is by recording a debit of $25,500, which relates to the transfer of the closing of this beauty service fees income account. And altogether, that leaves us with a net balance of 0, which is what we should always get whenever you're preparing an expense and income account to get full marks in the exam. Okay? Now, we have one more question, which is to show the relevant extracts of the balance sheet as of 30 September 2017. So this is very easy. So what we have to do is, if you were preparing the balance sheet at 30 September 2017, do you recall that we had 1 quarter of the $24,000, which was $6,000, relating to advertising payment for the month of November and December 2017. Therefore, they fall within the definition of a current asset because they refer to advertising for the next financial year. So under current assets, we're recording prepaid advertising of $6,000, and the discussion we just had a while ago for beauty service fees received in advance being a current liability of $1,000, which is what we will show in the balance sheet. So this is simply the extract, and it's very easy for you to get full marks.